The global landscape is shifting. A new era of tension has gripped the world's two largest economies. The United States and China are locked in a trade war, a conflict with far-reaching consequences. This is not just a war of tariffs and trade deficits. It's a struggle for economic dominance, technological supremacy, and global influence. At the heart of this conflict lie fundamental disagreements over trade practices, intellectual property, and market access. The U.S. accuses China of unfair trade practices, intellectual property theft, and forced technology transfers. China, in turn, accuses the U.S. of protectionism and attempts to contain its rise as a global power. This trade war has escalated dramatically in recent weeks. The U.S. imposed new tariffs on Chinese imports on February 4, 2025. These tariffs target a wide range of goods from electronics to machinery. China retaliated swiftly, slapping tariffs on U.S. coal, LNG, crude oil, farm equipment, and vehicles. The situation is further complicated by China's strategic control over critical resources, particularly tungsten. This rare metal is essential for various industrial and military applications, and China holds a tight grip on its production and export. Tungsten, a metal prized for its strength and heat resistance, has emerged as a key weapon in this trade war. Its uses are vast and vital, ranging from cutting tools and armor-piercing ammunition to aerospace components and nuclear reactors. China, holding over 80% of the world's tungsten reserves, has effectively weaponized this resource. The U.S., heavily reliant on Chinese tungsten imports, now faces a critical vulnerability. China's refusal to export tungsten to the U.S. has sent shockwaves through the American defense industry and manufacturing sector. This strategic move has exposed the risks of relying on a single nation for critical resources. China's dominance in tungsten production is the result of decades of strategic planning and investment. The country has aggressively pursued policies to secure its control over this vital metal, including acquiring mines abroad and offering subsidies to domestic producers. The current situation underscores the importance of resource security in an increasingly competitive world. The U.S. is now scrambling to diversify its supply chains and reduce its dependence on Chinese tungsten. This includes exploring domestic mining options, seeking alternative suppliers, and investing in research and development for substitutes. In the midst of this global tungsten standoff, India stands apart. A unique historical agreement grants India special access to Chinese tungsten. This agreement, a relic of a bygone era, highlights the complexities and shifting alliances of the 21st century. The details of this agreement remain shrouded in secrecy. However, it is believed to have originated during a period of closer ties between India and China. This agreement underscores the strategic importance of tungsten and the lengths to which nations will go to secure their supply. China's willingness to supply tungsten to India, while simultaneously cutting off the U.S., has raised eyebrows in Washington. Some analysts view it as a tactical move by China to drive a wedge between the U.S. and India. Others see it as a reflection of China's long-standing relationship with India and its desire to maintain a balance of power in the region. India, for its part, has remained tight-lipped on the issue. The country is walking a diplomatic tightrope, seeking to maintain good relations with both the U.S. and China. This delicate balancing act reflects the challenging geopolitical landscape of the 21st century. The trade war's tremors are being felt far beyond the borders of the U.S. and China. Global markets are on edge, anxious about the escalating tensions and their potential impact on the global economy. The European Union, a major trading partner of both the U.S. and China, is particularly vulnerable. European leaders have expressed deep concern over the trade war's potential to disrupt global supply chains and dampen economic growth. The EU, already grappling with its own internal challenges, is now caught in the crossfire of a conflict not of its making. Asian markets, too, are feeling the heat. Despite overall strong economic performance, the uncertainty surrounding the trade war has cast a shadow over the region. Investors are jittery, and businesses are hesitant to make long-term commitments. The interconnectedness of the global economy means that no country is immune to the fallout from this trade war. The longer it drags on, the greater the risk of collateral damage to other economies around the world. Section 5. Gold fever investors seek safe haven amidst uncertainty. In times of economic uncertainty, investors often flock to safe haven assets like gold. The current trade war is no exception. Gold prices have surged in recent weeks, reaching highs not seen in years. This surge in demand reflects a growing sense of unease among investors about the global economic outlook. Gold, traditionally viewed as a store of value, tends to appreciate during periods of geopolitical instability and economic turmoil. The current trade war, with its unpredictable trajectory and potential for escalation, has created the perfect conditions for a gold rally. Investors, worried about the impact of the trade war on stock markets and other risk assets, are seeking refuge in gold. This flight to safety has driven up demand for gold bars, coins, and gold-backed exchange-traded funds, or ETFs. The price of gold is a barometer of global economic anxiety. The current surge in gold prices is a clear indication that investors are bracing for further turbulence in the months ahead. Section 6. Fighting back. The U.S. response to China's tactics. Faced with China's aggressive trade tactics, the U.S. is not standing idly by. The Biden administration has implemented a multi-pronged strategy to counter China's economic and technological ambitions. This includes strengthening alliances, investing in domestic manufacturing, and seeking alternative sources for critical minerals. Recognizing the need to reduce its reliance on China, the U.S. is actively seeking to diversify its supply chains. This includes forging closer ties with allies like Australia, Canada, and Japan, all of which possess significant reserves of critical minerals. The U.S. is also ramping up domestic production of critical minerals like tungsten. This includes reopening old mines, streamlining permitting processes for new mines, and investing in research and development to improve mining technologies. Furthermore, the U.S. is investing heavily in research and development to find substitutes for tungsten. This includes exploring the use of alternative materials and developing new manufacturing processes that reduce or eliminate the need for tungsten. Section 7. A looming threat. The uncertain future of global trade. The ongoing trade war between the U.S. and China has cast a long shadow over the global economy. The uncertainty surrounding the conflict's trajectory and potential for escalation has created a climate of anxiety among businesses and investors worldwide. The rules-based trading order, painstakingly built over decades, is now under threat. The trade war has undermined trust between nations and raised the specter of protectionism. This trend, if left unchecked, could have devastating consequences for the global economy. The current situation highlights the urgent need for dialogue and cooperation. The U.S. and China, as the world's two largest economies, have a responsibility to find a way to coexist peacefully and constructively. Failure to do so could have catastrophic consequences for both nations and the wider world. The stakes are high, and the clock is ticking. The world is watching anxiously as the trade war unfolds, hoping for a swift and peaceful resolution. Section 8. Seeking solutions, a path towards cooperation. Despite the current impasse, there is still hope for a resolution to this trade war. Both the U.S. and China have a vested interest in finding a way to coexist peacefully and productively. A return to the negotiating table, coupled with a willingness to compromise, is essential to averting further economic damage. Key to any successful resolution will be addressing the underlying issues that sparked the conflict. This includes finding common ground on issues such as intellectual property protection, market access, and forced technology transfers. International organizations, such as the World Trade Organization, can play a vital role in facilitating dialogue and mediating disputes. A strengthened and reformed WTO, with the authority to enforce rules and resolve disputes fairly, is essential to ensuring a stable and predictable global trading system. Ultimately, the path to resolving this trade war lies in recognizing our shared humanity and interconnectedness. The U.S. and China, along with other nations, must work together to build a more just, equitable, and sustainable global order. Section 9. The urgent need for dialogue and collaboration. The ongoing trade war between the U.S. and China is a stark reminder of the fragility of the global order. It underscores the urgent need for dialogue, cooperation, and a renewed commitment to multilateralism. The stakes are simply too high for anything less. We live in an interconnected world, where economic prosperity and security are inextricably linked. The actions of one nation inevitably have ripple effects on others. The trade war, with its potential to disrupt global supply chains, dampen economic growth, and fuel geopolitical tensions, is a case in point. Now is the time for cool heads and steady hands. The US and China must resist the temptation to retreat into protectionism and isolationism. Instead, they must embrace the spirit of cooperation and work together to address the challenges facing our world. The future of the global economy, and indeed the planet, may depend on it.